Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo Modiba and thanks for joining me. Tonight, I'm joined by Gerhard Le Roux, African sales trader at S.P Reid, and we're looking at two dominant brewers in East African region, namely EAVL, East African Breweries, and Tanzania Breweries, or Tanzania Breweries more appropriately. Gerhard, your take on the sector as a whole? I mean, if you take a slightly, I guess, longer term perspective and look at the operational performance of both of these businesses, it's pretty impressive.
Absolutely, they've managed to grow into real powerhouses in each of their respective countries. East African Breweries in Kenya really dominates that market with 73% market share, while on the other hand, Tanzanian Breweries has also got a substantial market share advantage there, with in excess of 85% of the market basically captured by the company. So it's really strong players. They've managed to really grow scale internally quite nicely over the last couple of years. But now we're sort of seeing a bit of a regional story coming out of the brewers in East Africa, where the guys no longer can just rely on the local market, but sort of have to look beyond for places to grow. Right.
That lovely thing that all of these businesses sort of have, which is you've gone through your early growth spurt. Now you're fairly mature. How do you go about generating additional revenue and profits?
Absolutely, and also how do you compete? How do you compete with other regional players who are also dominant in their own geographies that really want to start taking a bit of your market share away?
Sure.
So we've actually seen quite an interesting mix, especially in Kenya, where SAB has recently bought a smallish brewery, Crown Beverages, there we go. They are a producer of one of Uganda's main beers, Nile. It's Nile Lager, and that beer has really resonated with some of the locals in Kenya in the northern region. So it's actually allowed them to have a foothold in that economy, and we'll see how that sort of starts to play out. On the other side in Tanzania, where East African Breweries in 2012 sold a massive stake, they had 20% of the Tanzanian breweries, sold it back to the company, and now they are directly competing with them with introduction of Serengeti into the Tanzanian beer market.
So interesting times ahead for both businesses.
Absolutely. I think it's one of those where the last couple of years have been sort of interesting. The East African region especially, where EABL has really struggled with really keeping their margins intact. And recently the government increased the sales tax on one of their main beers that really hit revenues exceptionally hard.
Right.
Some of the sort of the mid-category beers in Kenya are really elastic. So if people are under pressure and the price of the product goes up, the amount of product that the underlying consumer actually buys really does decrease quite a lot. And in that specific instance, the beer went down in terms of volume 30%, which is incredible.
It is. Let's focus on East African Breweries again. If you're taking a slightly longer term perspective, this has been a phenomenal company, but as you touch on, there are potentially a few headwinds for the company going forward. Your perception about where they stand in terms, they have introduced stuff like spirits over the course of the last few years, and that seems to be gaining traction. Is that the direction that we're likely to see this business doing, introducing new innovative ways of generating revenue?
It's actually really exciting for the company, because they've really been able now to leverage off their global partner,
right.
Which is Diageo, which is one of the largest spirits producers on earth, and to bring that know-how into your business and be able to really drive a specific portion of the market is quite exciting for them. And usually spirits is a fairly high sort of margin game, so you're able to increase quite nicely your margins for the firm.
Right.
East Africa as a region, if I can just touch on that, is sub-Saharan Africa is looking like it's going to increase volumes of beer in the next 10 years by around about 40%.
And what's driving that?
it's demographics, it's population growth.
Yeah.
EABL is focused on the younger generation as being one of their key drivers, and they've linked up with sports teams and really tried to change the demographic of beer drinkers in Kenya, where it usually used to be older men, to include the younger generation as well as women into the mix.
Right.
So it's been fairly successful, and it looks like EABL is going to have a better time of things, I think, in the coming couple of years.
So in spite of the short-term headwinds, potentially the outlook from a revenue perspective, never mind spirits, and specifically for beer, is still quite strong.
Absolutely. Africans love beer. It's the
we
most.
do.
It's the extraordinary thing about these companies is they come into markets that are really lovers of the product, and where you see sometimes in Southeast Asia where the beers are just too expensive for the local populace to actually have in good volume, here you really see that then Africans have grown up with beer, and it's a product that everyone really wants to consume. So in that there's real growth in terms of volume. We see East Africa as having 147 odd million people at the moment, which is as a collective is a real powerhouse.
Yeah.
And if you look in the expansions that EABL have been able to achieve in the last while, going to South Sudan and then competing directly in some of its neighbors, the likes of Uganda, where it's got a 50% odd market share through its local subsidiary, Ugandan breweries.
Yep.
That's really strong drivers for the future for this company, and very exciting, I think.
In terms of the outlook going forward for things like margins, are we likely to see, we've spoken a little bit about the top line and volume growth, are we likely to see a continuation in terms of margins being squeezed?
We've seen that quite a bit. From sort of 2011, the margins have come down quite substantially for EABL, and I really do think that is something that will stabilize as the new entrants sort of find their feet and everyone gets to play along. But it's not. I don't expect them to be able to go back to the margins they had before.
Sure.
So if you look at valuations on the back of those margins, you know, the company currently actually does look fairly expensive. So I'd probably say hold to a fully valued. But this is a company, if you look at in the longer term, and if you get that demographic dividend that people continually speak about when it comes to Africa, that is really something that I think they'd be able to benefit from and really grow quite nicely in the future.
So if I could summarize, you're saying operationally this business may do fairly well, margins will stabilize in and around the current areas, revenue growth long term, or the prospects thereof look quite good, but that could potentially be in the price.
Yeah, it possibly is already in the price. Kenya's had quite a strong run in terms of equity markets, and I think in terms of consumer staples, it is not massively overpriced. If you look at some of its peers, you know, in the likes of Nigeria, but it is full. It's 30 times earnings at the moment, which is substantial.
Right.
We'd like to see what happens in the coming numbers, if they've been able to really leverage off the gains that they've made in the local beer market, as well as the spirit contribution, and see if that actually changed the earnings. And we expect it should be fairly positive, but the extent is by how much. And you know.
If we shift focus to Tanzania and Tanzania breweries, your I guess thesis in terms of revenue outlook for that business?
I think it's also very strong. They've got a very strong demographic of consumers that are not really part of the whole economy as yet. Tanzania is basically emerging as a real East African player, and as the economy grows, I think really margins and not margins, volumes really continue to grow. The Serengeti entry of East African breweries into the Tanzanian market has been, I would say, not really successful as yet. Right. There's very strong brands in Tanzania that people enjoy drinking, even with the very strong marketing pitches that they've done in Tanzania. They've only really been able to gain 10% market share, and that's really trying, and it's low, very low margins, and just sales push all the way. So that's unsustainable. So if it's enough for them to remain there is to be seen, But I think Tanzanian breweries really is a strong contender for the future.
Right, in spite of all of the competition that's potentially coming about.
Well, with a major global partner, it makes your life a lot easier.
It does, doesn't it?
If you can leverage off the expertise of your global partner, that is really something that helps a lot. South African breweries is the major producer of beer around the continent, and have done so very successfully. They've done so very successfully in Tanzania. So Tanzanian breweries had a very strong run-up sort of middle of last year, when the market opened up for the first time to foreign, when they relinquished their foreign ownership limits. On the back of that, we've really seen the price stabilize. And currently it's sort of midway between where it started at sort of 10,000 Tanzanian shillings to I think it's 14,500 odd at the moment. And one of the problems has been for investors is what's the currency is going to do.
Right.
So the Tanzanian shilling has really gotten hurt over the last couple of months, and it's devalued in excess of 25%. Right. So if you're an investor looking to invest in the company, obviously it's gotten 25% cheaper, but now are we really at the bottom of the currency cycle? I'd probably say that we're getting close.
Yep. And
this is a company that's worth a look, and I think it's probably an add to a buy, if anything.
Again, you know, for investors, this probably ticks the boxes in terms of strong operational performance, very strong big brother in the back, as you touch on, potentially good volume sales going forward. Margins, what are those looking like for them?
Obviously, with the entry of Serengeti into the mix, margins have also taken a bit of a hit. Yeah. You've seen grain prices and the like be quite strong. It's now sort of gone lower a bit on the back of energy prices, but it's still fairly high. So you've had cost push from your base commodities, as well as then your competitors coming in at cost, effectively trying to get a foothold in your market. So it's been a tough environment for them, and they haven't really been able to hold on to the margins that they've had before. But it's still very well managed. They still keep a very high proportion of the economy really love their products. Perfect. So
let's leave it there. So on aggregate, we're fairly positive on this one.
Fairly positive on this one.
Let's leave it there. Thanks. Thanks to my guest, Gerhard Le Roux, African sales trader at S.P Reid. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, goodbye.